Jan Hatzius, Goldman Sachs' chief economist. Peter described this team as the dream team. How would you describe this team?
I would agree with Peter that this is a very strong set of appointments and certainly something that provides continuity and a very strong, sense of unity, probably also, at least as far as monetary policy is concerned. I think the views of Chair Powell and soon-to-be Vice Chair Brainard are going to mesh very well. And so I would agree with what Peter has been saying.
The market right now is pricing in a second rate hike for November of 2022. What do you think? Is that the right call?
It's consistent with our forecast. We'll see whether it's the right call, but our forecast is one hike soon after the end of tapering. We're looking at the July meeting, although June is certainly possible, and then a second hike in November. I think that's consistent with the economic data that we're seeing and the fact that when you get to the middle of next year, it's probably still going to be very high inflation that makes it kind of natural to transition into hikes.
Jan, do you think today's news makes a faster taper any more likely?
I think, so it's not my expectation that we'll get a faster taper. I think it will be discussed at the December meeting. My expectation, though, would be that they stick with the current pace and then hike once you get to the end of that. I think another important point to keep in mind is that projecting more rate hikes down the road is a pretty close substitute to hiking earlier from the perspective of the impact on financial conditions. And so I think that's maybe the preferred alternative.
Jan, what would be the conditions, though, to see a faster taper? What would have to happen either in the economy or from policy in D.C.?
Well, look, I think it's mainly about the path of inflation. If you see, even higher inflation, especially in the more trending categories into 2022, I think then you could see an acceleration. But time is relatively short. I mean, an announcement of a faster taper in December, I think the hurdle for that is still relatively high. Then you get to the January or March FOMC meeting, and then you're relatively close to the end already. So I think you'd need to see some substantial upside surprises relative to at least our forecast, which is already 4.3%, 4.4% for core PCE inflation by the end of the year.
Jan, I may be seeing things that aren't there, but you look at the president's statements and inflation is in front of the labor market in terms of just in terms of the sequencing and the language. Do you think we should think about that more deeply and wonder whether actually inflation is now a bigger priority for the Fed going forward after the conversations with the president, after the conversations with Senator Manchin for the Fed, which is largely focused in terms of the language that has been delivered lately on the labor market?
Well, I mean, I think it is the number one topic at the moment, so it's not surprising. I mean, certainly as far as Washington is concerned, the concern is more on the inflation side. So I wouldn't really view this as surprising relative to the news flow we've been getting and relative to the polling that we've been getting, which of course shows that inflation is a significant issue for the president and his team.